Hello students, I hope you all are doing good and fine. So today we will be discussing your December 2025 FR pre-mock. We have already discussed the section A and I've already uploaded the video. Please do watch it. If you have any doubts, you can connect with me and ask me, sir, in this question I have this issue, etc. XYZ. So now in this video, we will be starting with our section B part. In section B, as you know, there are three case study. Each case study will have 5 questions and 2 marks each, so 10 marks. So there are 3 questions which I will create separate videos for each case scenario. First one is Danny Company, Harry and Hickson. So first in this video we will do Danny Company. Chalo then let us start with the requirement of section B. I hope everyone knows that in your exam for per mark you should allocate 1.8 minutes. So now coming to section B. Section B, Danny Company. So let us see this. This is a section B question. Okay, sir. We can see something as trade inventory. Okay, I think a question is from what? So by just seeing this, a question is from IES to inventory. Sir, trade receivable is there. So question regarding IFRS 9. Convertible loan, sir, IFRS 9. So this convertible loan is a frequently repeated question, as I mentioned in the class, that in our test also, in our class also, we have done 2 to 3 questions. MCQs also have given you in the test series also that equity component, calculate the liability, etc. The calculation can come. Let us see that now. Then the discount rate is given. They have given the question 1, 2, 3, 4, and 5. So then let us start with the first thing. D is preparing its financial statements for the year. D is preparing its financial statement for the year ended 31st December 2008. Okay, year end is what, sir? 31st December 2008. And has identified the following issues. Okay, there are following issues which we have to correct it. इसका meaning क्या है? Sir, कुछ ना कुछ issue है. Issues are there, we have to rectify it. It's simple. Then inventory. Chalo, the first issue is regarding inventory. Let us read that. In the draft financial statements, D closing inventory is how much? 8.6. Okay, so the closing inventory is what? 8.6. As they are mentioned here, issues are there. That means this closing inventory could be wrong. Could be wrong. I am saying we will read it and understand. Excuse me. 8.6. Product A, which costs 0.36 million. Okay, okay. In the draft financial statement, this is the closing inventory. In this closing inventory, there is a product A, which has a cost of 0.36 million, which was incorrectly included in its balance at 0.36. Now, you only say this is wrong or not? Yes, sir, it is wrong. So, what will I do? So this 8.6 inventory includes product A, but the value at which it is included is 0.63. It is wrong. We should include it at cost. We should include it at cost of 0.36. So what will I do? I will do one basic thing. Sir, 8.6. This 8.6 I will take. This I will minus because I have to remove that part and I will add it the cost. I will add the cost, that is what, 0.36. I will get the value of the inventory. Then let us see. Yes, sir. Product B. Okay, there is one more product which is included here. Excuse me. Product B was included at a cost of 0.4. Okay, so product B is included at 0.4. But what do we see? We see the cost and NRV, whichever is lower. So, however, it could only be sold for 50% of the normal selling price. Arey baap re baap. Cost is how much? 0.4. 0.4 million. So NRV क्या हो जाएगा? NRV will be less or not? Because they are saying that we can sell this. Sell it at 50% of the normal selling price. Normal selling price, sir, we should know the selling price. So I will say my cost is how much, sir? 0.4. My selling price I have to calculate SP. So my NRV will be what, sir? NRV will be selling price into 50%. Let us see, have they given the selling price or not? 50% of the normal selling price due to technological fault in one of the parts. They are saying there is some technology issue, there is some fault, we have to, that is the reason we are only able to sell at 50%. D charges a markup of 30% on product B. Okay, okay, okay. It is a case of what's a markup. Have they directly given us the selling price? They have not given directly the selling price. They are selling that normally we charge 30% commission. 30 percentage profit on this, on the cost markup. In case of markup, understand everyone, do not forget, in case of markup, sales value is 100 and here the percentage is 30. So 130, cost will be how much? 30 percentage on this extra 30 percentage. Sir, then profit will be how much? Sir, profit will be a 30 percentage. Now, sir, they have given the cost, they have given the 30%. So, with this, can we calculate the NRV or not? You only say me. We can easily calculate the NRV here. No, the selling price and then NRV. So, what will be the selling price? See here. So, my cost was 0.4. So, 0.4 cross multiply, you will automatically get 0.4 into 130 percentage. 0.52. 0.52 is what? So 0.52 is the selling price. So my NRV will become what? This is my selling price. My NRV will be what? Sir, NRV will be 0.52 into 50 percentage. Into 50 percentage. That is 0.26. So 0.26 I got the value. See, I did not complete, I did not read the full case. Whatever I've identified, okay, the question could be regarding this scenario, I've written the data here as of now. Then once we read the question, we get to know, okay, what is the issue here? Issue is that. So I know, okay, these are the values which you have to consider. So 0.26 should be the value, but we have included 0.4. So what will I do? So from 8.6, we will remove this also. And from that also, I have to remove this and add it. I have to add it, this value. Because your inventory is shown at lower of cost or NRV. A very simple easy question from IS2. A question could be that the question could be could ask you to calculate the uh, new amount of the inventory after the adjustment. What is the value of the inventory? Let us see. So easy part. Then let us see the trade receivable. Trade receivable. In trade receivable, what they mentioned, year end was what? 31st December. On 1st November 2008, D factored. Okay, it is regarding factoring, sir. So in factoring, what we have learned, two things: without recourse, with recourse. Without recourse means what? Without recourse means risk and rewards are transferred. Without recourse means risk and rewards are transferred. If risk and rewards are transferred, we will recognize this as a sale. Sir, if it is with recourse means the party can come back and take the money or collect the money. In that case, what will I say? I will record the amount received as a liability, not as a sale, because my risk and rewards are not transferred. When we derecognize a trade receivable asset, when risk and rewards are transferred. Here they mention that D factored a sold 2 million of the trade receivable to C. Okay, D is selling to what? C. Company C, capital company. D received an immediate payment of 1.8. Okay, out of 2, what is the payment they are receiving? 1.8, sir. Under the following factoring agreement, any receivables not collected after 4 months will be sold back to D. So it is a case of what? Here they are saying that the if the amount is not paid, if amount is not paid, what we can do? If the amount is not paid, we can sell it back. D company, it can be sold back to D. So C can sell back to D if the amount is not paid. If they can sell it, it is a with recourse. If it is a with recourse, then is the risk and rewards transferred? Sir, risk and rewards are not transferred. Not transferred. If risk and rewards are not transferred, bete, if risk and rewards are not transferred, what should we do? What should we do? We should treat this as, do we treat this as a sale? Not a sale. It will be what? Sir, it will be a financial liability, a loan. We have received a loan. No accounting entries have been made in the relation of this factoring agreement. They have not made any entry. We have to mention it. So the question could be regarding this: what should be done for this account? So this is also easy, a straightforward thing. Then chalo, next one. D issues 8 percentage 30 million convertible loan notes on 31st December 2008 at the year end only 8 percentage. So this is my coupon rate. Yes, sir. Interest is paid annually in arrears on 31st December. An equivalent loan without the conversion option would carry an interest rate of 10%. So remember, in convertible bond, step one is what? We have to identify financial liability and equity. Financial liability means Sir, contractual cash flow, we discounted using which rate? Loan without an conversion option. Loan without an conversion option, we will use it. The loan notes are redeemable or convertible after a period of 5 years at an option of the loan note holder. So the option is given, it's convertible loan. So convertible loan, financial liability plus equity we should record. So they have given this calculation here. Yes, sir. So let us read the requirement. What? For sure, the requirement will be this only. What is the value of equity or liability? How will you calculate? Now, what is the cash flow? Your contractual cash flow will be what? The loan is for how many years? The loan is for the convertible bond is for 5 years. So for 5 years, I have to consider the cash flow. Sir, every year, what is the amount we will be paying? My contractual cash flow will be what? 30 million into 8 percentage. That is 2.4. So what will I say here now? See, 30 million into 8 percentage. So this I know, sir. That is 2.4. So what will I say here? Sir, 2.4, 2.4, 2.4, 2.4 and 2.4. That is 1, 2, 3, 4, 5. As well as the principal amount will also be repaid at the end. Yes, sir, 30 million. Now, this is at what rate? At 8%. Now, when I discount this, at what value I will discount it? Sir, we will discount it at 10 percentage to calculate this. I hope everyone remembers the convertible bonds. What is the treatment we do? So, we have covered this. We have done. We are done reading with the case which is given. It was inventory, trade, receivable, convertible loan. Let us start with the first question. What is the first question saying this? Okay, the first question is what is the correct carrying amount of inventory in D's financial statement at 31st December 2008? Up to two decimals, we have to answer this. So they're saying, what is the correct value of the inventory? Now, just above, we have seen that the inventory value was not properly recorded. It was not properly recorded. We have to change it and record it. So, how much it will be? So, see here now. The value will be, I say that my closing inventory value was what in trial balance. So trial balance it was 8.6 million. If you remember 8.6 million, yes sir. Now from this 8.6 million, what will I do? Sir, we will remove the incorrect part which is recorded at 0.63. I will remove this 0.63 and I will include 0.36. So I say remove 0.63 million, add the original value, that is cost, correct value 6 million. So I will remove this. Yes, sir. Then, sir, what is the other thing? For the other thing, also, we have seen that an item is included, an inventory product B is included at a cost of 0.4. It is cost, but NRV kya hai iska? Sir, NRV is normal selling price into 50 percentage. Sir, how did we calculate selling price? We have already done here. Markup 0.2, this, etc. So, what will I say? I will remove 0.4. I will remove 0.4 cost. This is for your product A. For product B, then I will add it at NRV. What is the NRV? So the NRV was 0.26. 0.26. If you do this, you get the total. Total. Let us do the total and see. 8.6 minus 0.63 plus 8.6, 0.63 plus 0.36 minus 0.4 plus 0.26. So if I do the total, what is the value I'm getting? The value which I'm getting is 8.19. So it's near two decimal 8.19. A very simple and an easy question. So we have seen there were two questions regarding inventory in section A. One was regarding retrospective impact, and this was from purely from IS2 only. So with this, a very easy, simple question. Now a question to everyone. Why do we record the inventory at lower of cost or NRV? Why do we record it? What is the basic idea? Can I say the basic idea is faithful representation? Yes or no? If I say when compared to FIFO and weighted average cost, it's accounting policy. So comparability issue will be that. But why are we recording the inventory at lower of cost or NRV? For faithful representation. to show the true value of the inventory. Like impairment also, why do we do impairment? To show the true value of the asset, faithful representation. Sir, impairment of inventory is done in IAS 2 only, not in IAS 36. Yes. Then next question. The next question. Let us read the next question. Which of the following reflects the correct accounting treatment for factoring of these trade receivable in the year ended 31st December 2008. So what did I mention here? In trade receivable, they mentioned they have factored and sold it, but they have received a payment of 1.8. But under the agreement, what was mentioned? If capital company will not receive the amount from the customer, capital company can go back and ask from D company. That means risk and rewards are not transferred. It should be accounted as a loan. It's a with recourse. Without recourse means they will not come back. It is with recourse we can go back. So see here now. See, if you remember in the class also we had done a flow chart regarding this one. See, this Ram, we had taken the example of Ram. Ram will cry if he can sit and cry, etc. That means risk and rewards are transferred. It's without recourse, recognized as a sale. Sir, if it is with recourse, that means risk and rewards are not transferred, then it's like a loan, financial liability we treat it. So see here now. Let us read this. An administrative, will you recognize this as an administrative expense? Galat. This is wrong, sir. The receivable should be de-recognized. No, no, no. Receivable we will de-recognize in what? Without recourse. It's wrong. It is with recourse here. This represents a without recourse. No, this is wrong. So the last option is what? The receipt of 8 point should be treated as a loan. Yes, sir. What is the entry we pass? Debit, credit, cash, and loan of 1.8, 1.8. Sir, receivables, what value will be in a book? 2 million will be the receivable in our books. Still, it will reflect. A very easy, straightforward question. Yes, sir. Then next one. Okay, next also is a theory question. The measurement of inventory at lower of cost or NRV reflects which of the following qualitative characteristics? And I mentioned to you, why do we record this cost in NRV? For faithful representation, straightforward question. Will timeliness come in picture? No. Verifiability will come? No. Understandability? No. Understandability when policies come into picture. Here, sir, it is what, sir? Faithful representation, a straightforward question. Straightforward question. Yes, sir. Excuse me. Then, next question. What is the carrying amount of equity component of the convertible loan notes at 31st December 2008? They are saying what is the value of the equity component. Sir, we have already done in the class 3 to 4 MCQs regarding this. In the test also we have done. Same thing. This also, if you remember in the question bank, this question was included. If you remember this question, if you remember this question also was included in the question bank. The questions were different, but the understanding, the logic, and the way to do was same only. This question also was included. It was included in your test also. It was included in your test also, if you remember. Yes, sir. Now, chalo, let us start with the convertible bond. Now, let me do for convertible bond. So, let me do the calculation here only. My contractual cash flow will be how much better? So, 30 million into 8 percentage. That is 2.4. So that is 2.4, 2.4, 2.4, 2.4, 2.4. 1, 2, 3, 4, 5. And the fifth year, 30 million I have to pay. So this is at 8 percentage. Now when I discount it, I discount at a rate which is which is which is the rate which is in the market, and the bonds, the market, the interest rate of the bond without conversion option 10%. So sir, do we use the discount rate given? Yes, always use the discount rate that is given in the question rather than through calculator, because you'll get different answer. Use that. So 0.91, 0.83, 0.75, then 0.68, 0.62, 0.62. Let us multiply this and do this part. 21.84, 0.83 into 2.4, 1.992, 0.75 into 2.4, 1.8, 0.68 into 2.4, 1.632, 0.62 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 into 2.4, 18.6. So if we do this total, excuse me, this value I've written wrong, no? 2.184. That is the reason I'm doing the total, I'm getting more. So I'm getting 27.696. Sir, we can't see any number like this 27.9. Can I say this is what? It's your financial liability. Understand that. It's your financial liability. Sir, how we will get the equity component? Equity component will be 30 million, the total proceeds, minus financial liability part 27.696. If I do this, I'm getting the equity value as 23.04. 23.04, and it's a straightforward question. 2.30, sorry, not 23, it's 2.304 million dollars. A very easy and a simple. Many students will think, okay sir, option is not Arey baap re baap, they're asking equity. No, equity is what? Total minus the financial liability. So this also done a very easy and a simple question. Yes sir. So till now we have done four questions from this case study. Nothing was out of the box, I think so. Then chalo the last question. Let us see the last question. Okay, the last question is regarding IFRS 18. Which of the following statement is incorrect according to IFRS 18 presentation and disclosure in financial statement? I mentioned you that in IFRS 18 aggregation, disaggregation, offsetting, which category it will be recorded, for how many months we have to prepare the reporting this financial statements, bare minimum 52 weeks, it can be less than that. All these are the points which we have covered in the class. If you remember, see here, where is your IFRS 18 notes? Yeah. See, as I mentioned, the important part was what? Aggregation, disaggregation. So same thing. Let us see that the question is regarding which topic now here. Let us read. And I mentioned, let us use the elimination method technique to do this question. Excuse me. Which of the following statement is incorrect according to IFRS 18? Okay, incorrect. It should be incorrect. It should not be correct. Okay, sir. Entities are permitted to prepare a financial statement for a period shorter than 1 year. In the class, I've discussed that yes, we can prepare less than 1 year also. But sir, I'm dicey about this. Let us keep aside. Assets and liabilities should be aggregated based on characters that are shared and disaggregated based on the characters that are not shared. It's a true. It's a true sentence. I mentioned aggregation can be done for what? The items which have same characteristics, and we will disaggregate like impairment, etc. We can't aggregate them. It's true, sir. This is not the option. Asset and liabilities, income and expense should not be offset unless another IFRS accounting standard or allows offsetting. Yes, sir. You can't offset it unless and until any IS or IFRS says you. In IFRS 9, we have learned offsetting. In income tax IS 12, we have learned offsetting. It's true, sir. This is also out of the box. Excuse me. Presenting trade receivable net of allowance or credit loss is an example of offsetting. They are saying what? Normally we have trade receivable. No? This trade receivable, we have this $10,000. Less we record what? Allowance, loss allowance. When we record this loss allowance of $2,000, it's a random number, $8,000. Is this offsetting? No, bete. In IFRS 19, what in IFRS 9, what did we learn? Offsetting means what? Offsetting means from one party we have a trade receivable and we also have a trade payable. That one is offsetting. The reduction in the value of this etc is not offsetting, it is impairment. Like if you show depreciation, is that offsetting? Nahi baba. So this is also wrong, sir. It's now this is incorrect or not? Yes, sir, this is incorrect. Offsetting does not mean this. This is incorrect statement. Okay, sir. So there are two things now. We have to decide the answer. Entities are permitted to prepare financial statement for a period shorter than 1 year. Yes, as we have explained, as I've explained in the class also, that the company can prepare the financial statement for shorter than 1 year also. It's okay. There is no such a problem on this one key. We can't prepare or this one. So here, what will I say here now? What is the important thing? We say here that the companies can prepare. So the incorrect statement is what? This is also correct only. So the incorrect statement is what? This one. It's not offsetting. It's not an example for this one. It's not an example for offsetting. Understand that. I hope this is clear. So with this, your this part is done. I hope there is no doubts in this part. So see here now, let me show. I think in IFRS 18 we have discussed this point also. See here, have I included this point here in the notes? See now, frequency of reporting. Financial statement must be prepared at least annually, usually to a consistent date. IFRS 18 allows a 52-week reporting period, leaving to varying year and dates. If reporting period changes, the entity must disclose and note that figures may not be comparable. Can sir the company prepare the financial statement for shorter than 1 year? Yes, they can prepare. It can be shorter than a year also, no issues in that. So with this, your this question is done. So with this, the first question, your section B first question is done. It was easy, straightforward. So with this, we are done with this question. So I hope you have understood this question. If you have any doubts, you can connect with me. My number is 6361764852. If you have any doubts regarding FR or SBR, you can connect with me. I can guide you or help you. So, sir, the next case scenario will be doing the next video. So, bye bye. Have a good day. Signing off. Radhe Radhe to everyone.